Dun, 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 depreciation. All right, that is going to be definitely one of the things that we need to do is to complete our depreciation. But before that, there's actually one more thing ahead of that, which is to adjust for our bad debt expense. So as we remember, the last couple times we were at this section right here, the corner bookstore decided to call us and say, hey, I cannot afford to pay you for this invoice. And we said, okay. So we now currently have a debit balance of $194.10 in the allowance for doubtful accounts. Now, general rule of thumb is when you typically do your adjustments for bad debt, our assumption is going to say that we realistically have a 5% risk when it comes to allowing my customers to owe me money because, again, like Mr. Corner Bookstore decided to say, hey, I can't pay you. So therefore, we need to make an adjustment and go ahead and look at this. So here, based on 5% of account receivable balance, we are estimating that that's how much we're going to write off our bad debt expense. So again, we currently have a debit balance of $194.10 in the allowance for doubtful accounts. So how am I going to journalize this adjustment for the bad debt expense?
Let's see here. Well, will it first be the bad debt expense
Yes, good.
for the debit?
Yes. Right? Mm-hmm. Because we reached the end of the period. This is our adjustment entry. So good. So bad debt expense is definitely going to be our first account that we're recognizing.
And that number is 65,000.
Okay.
On my computer just froze up on me. Won't let me move out of my spot. Okay.
No.
And then it's going to be the allowance for doubtful accounts.
That's correct.
Yay, I did it right.
Okay. Which is going to be?
That is 11,100.
Yep.
Okay. Now we have to figure out how much bad debt I'm going to write off.
That was the bookstore. Who it was?
Okay, so, let's try to take it back to this. Now we need to create an estimated amount. What is my estimated amount that I'm going to write off?
Is it 5% of our current balance?
Yes. So what is my current balance in the accounts receivable?
$460.17.
All right, good. It's 400. And where did you find that? You can find that
I went to the ledger.
Good. So here I have, currently I have $460.17 in my current balance for my accounts receivable. So how do I calculate? So what's 5% of this amount?
$23.01.
So equals, where's my equals? Oh, there it is. Okay, nope. So here I'm going to go ahead and go equals 460.17 times 0.5% to get me a grand total of $23.01. Now, that's just how much my estimated amount is. So 2301 is just my estimated amount. Now, I'm also given a little, what do you call it? A little piece of information saying that right now my current balance in my allowance for doubtful accounts is
194.10.
exactly. So what method of the allowance method am I actually going to be doing? Do you guys remember?
Let me look. Direct write-off allowance method. Are we doing the allowance method?
We are doing the allowance method, but there are two methods underneath that, like two
Balance sheet
ways.
or income statement? Is that what you're
Correct.
talking about?
So it's
Correct.
sheet.
It is
Yeah,
definitely
the balance sheet, because we're estimating it right now.
correct. So here's our estimate is $23.01.
Uh-huh.
So, but I currently have a debit balance of $194.10. So what do I do with this amount here?
Estimate accounts receivable balance in allowance. Debt minus add. Oh, debit minus add, credit minus subtract.
Okay, so what am I adding and what am I subtracting?
Will,
You're on the right.
so you're gonna add the 2301 to the 194.10.
Okay, well, opposite way.
Oh,
Okay,
So you're
because
subtract.
so here the estimated amount is 2101, right? 2301. That is your ending balance. That's what you are trying to get to. Right now you currently have a debit balance of 194.10. How do you get from 194 debit balance to end with a 2301 credit balance in your allowance for
Oh,
doubtful
I see. You
accounts?
take the debit and subtract.
No, add.
Okay.
We're going to
Take the
add it
debit
together.
and you're gonna,
add.
Because at the end of the day, you need to have a $23.01 balance, credit balance in your allowance for doubtful accounts.
oh, so you're gonna write off the difference between the two?
Not the difference. Okay, so we have to do a quick review in chapter 11 over here. So when we complete this, right, when we have this, right, our end goal before writing off our bad debt expense is that we need to have a certain balance in our allowance for doubtful accounts, because my allowance for doubtful accounts is directly correlated to my bad debt expense. Now, I can't just write my bad debt expense to be 2301 because that is my ending balance. That's what I need to get to. But right now, I currently already have an existing balance in my allowance for doubtful accounts. My goal is to end with 2301 on the credit side in my allowance for doubtful accounts. I have a debit balance. How do I get from a debit to the credit side? Okay, so this is going back to how to zero an account. If I have a debit balance right now, how many steps to the right do I need to get to zero? You're going to have to do a 194.10. But that makes my account zero. I need to get to 2301. So that's why I have to add an additional 2301 to get me to my ending balance to be 2301 in my allowance for doubtful accounts on the credit side. Okay, so in this kind of game, this is why at the end of the day, when you are writing off your bad debt, you need to have a credit balance in the allowance for doubtful accounts. Okay, so how much am I going to actually be debiting and how much am I going to be actually crediting in my allowance for doubtful accounts?
217.11.
217.11. So 194.10 plus my 2301 gives me 217.11. Good. All right. So when we actually go into our ledger, this will make a lot more sense. Okay. So your description is going to be. Did I hit the record button? Yes, I did. So here I'm going to indicate here that this is going to be adjusting for bad debt. Okay. Okay. Or you could do uncollectible debt, whatever it is. Okay.
Okay.
So let's go ahead and go into our ledger.
Okay.
Okay. So I'm going to go to my bad debt expense account. So expenses. All right. And it should be all the way at the bottom. Okay. General journal number 19. Debit for 217.11. Okay. All right. So once we've completed this, right, now our bad debt expenses that we're going to be writing off a total of $217. And this includes corner bookstores debt that they're not going to pay us back for. Okay? All right. Now we make it to our assets. Okay, now we're going to go to accounts receivable. Our allowance for doubtful accounts. Okay. One more. Okay, here we are. So again, this one is adjusting for bad debt. Okay. So again, if we were to credit my account for 217.11. Now go ahead and calculate what your total ending balance is going to be in your allowance for doubtful accounts.
Two.
2301.
2301. I don't know why it's negative. It should be
Yeah, that's fine.
positive.
Negative.
Yes. Okay. Yep. Negative 2301. Got it.
Okay, so because it's a negative, that means on the credit side, it's going to be 2301. All right, so we can get rid of that. So 2301. So you see how the estimated amount is going to be your ending balance in your or your total debt expense is going to be the total ending balance, your estimated amount. Now, because we have an existing balance in the allowance for doubtful accounts, meaning we have more than 5% of our accounts receivable, we need to include that into writing off our bad debt because we have a pending uncollectible debt. Does that make sense? So every time you have an estimated amount when you're doing a bad debt expense, your estimated amount should always reflect the ending balance in your allowance for doubtful accounts on the credit side. So because again, I have a pre-existing, debt that's being uncollectible, not only am I including this, I'm also including 5% of my current accounts receivable. So therefore, I need to add them together to get my end goal to be writing off that 2301 for my existing accounts receivable. All right? And that's how you do bad debt expense. Okay? All right. So now we can move on to our depreciation. So if you guys have not done so yet, go ahead and pull out your depreciation tables. Okay. So for every single asset, fixed asset, as well as my intangible asset, I have here in each little tab a table for each one. Okay? Or a little tab for each one. So this is where we're going to be utilizing our general ledger because that reflects the total amount of my current asset cost. And I'm going to fill out my depreciation table according to what depreciation method I'm using, when I place into service, and etc., etc. So let's go ahead and tackle the first one, and everything should pan out from there. So, who wants to do the first one?
I'm sorry, what are those forms under that you had all of those up?
I'm sorry?
You have where it has like the tables? You sent those to us?
Yes, it's on the Excel sheet. On the classroom. It's the one of those sheets I told you not to use until the very, 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 very end. Okay, so again, I'll pull it up on the Google Classroom for you guys because I know for sure I had it up there. I double
No, I have
checked.
it in here. I see all the different like inventory sheets. I'm wondering if I didn't. Is it in with the financial stuff?
It's a separate one. It's a separate one right here. Coffee Cafe depreciation tables. All right, so you could go ahead and click this and open it in Google if you'd like.
Oh, here we go. Okay.
Okay. So again, this is a
Sorry, I didn't have those,
no worries.
so I'm opening it right now.
That's okay. Like I said, take a couple minutes to do that. All right.
Okay, I got it. I'm up.
Okay, so let's go ahead. So we're gonna take a little quick break away from our journal. So as you can see, we already reached the last end of the page. So we're going to be completing our depreciation expense on page 20. Now, what you can do for this is we're going to calculate every single asset for depreciation, and we're going to all put it into one account. So we're going to list out every single asset, and we're going to tie them all into one depreciation expense account. Okay, so I want you to hold off on the journal and let's complete the depreciation tables first, and then we can start piecing together our table or our journal. Okay? So again, we are in our depreciation tables. First scenario says,
Calculate 1 month depreciation on truck. Its mileage is 150.
mm-hmm,
Okay, before it needs maintenance.
mm-hmm.
Oh, 150. Is that 150,000 or
Oh yeah, that's a dot, sorry.
150?
Comma. Yeah, that's a comma.
Oh, okay, 150,000 before it needs maintenance. No salvage value, and useful life is 7 years. This month we drove a total of 1,200 miles.
Okay. So, what depreciation method are we going to be utilizing for this truck?
All
Units of production.
Units of production. What is it based off of?
What it's because it's got the mileage.
Yes, correct. So it's going to be based off mileage. So in your table here, go ahead and locate your truck. I believe it's after your shelves. So here's the truck. It's going to be units of production. So we can indicate that. I'm going to put UOP for short, units of production. Okay, it's a truck. Now, how much does my asset cost? Where can I find this information?
In the ledger.
In your ledger. Good. So let's go ahead and locate that asset. Where is my truck at?
That is, oops, under
Liabilities.
Not the truck loan. It's an asset.
okay.
Okay, depreciation is only for assets, fixed assets.
Scrolling. Share this.
Oh, okay.
There we go. Finally. So the full amount, the $32,208.90.
That is how much your asset cost. Good. So I'm going to go ahead and write 32,208.90 is my total asset cost. Now, do I have a salvage value? Does it say that I have a salvage value?
The scenario said no.
No salvage value. Okay, so there you go. No salvage value. Okay. How many miles can it go, or how many before you need maintenance?
150,000.
Good. And then lastly, when did you start to place it into service?
June.
June what? First off, when did you buy this asset?
June 8th.
June 8th. What's the assumption when you immediately drive off the parking lot?
It depreciates.
It depreciates the minute you drive off the parking lot. So that means you put your asset in service the day you purchased it. So in this case, June 8th. And what do we know about that?
Did you do the whole month of June because it's before the 15th?
Exactly. So that means we have to depreciate for the month of June. Okay, so my date on service is going to be June 8th. All right, good. So let's do some refreshing things here. So month is going to be obviously June. Okay, now how many miles did I drive this month in total?
12,000.
12,000 miles.
1,200, sorry.
Oh, no, I got it. 1,200. Okay. Now, this is going to do a lot of brain power, so you need to have your formulas ready. What is the depreciation basis for units of production?
Cost of asset
Mm-hmm.
minus
salvage.
Good. Minus salvage. So in this case, I have no salvage value, so my depreciation basis is going to be the 32,208.90. Okay. Good. Now, how do I solve for my depreciation rate? In this case, it's going to be considered the per unit rate.
Okay, and that's the depreciation basis minus the estimated units produced.
Not minus.
It's a fraction.
Fraction, yes.
Okay, so wait a minute. I'm watching you because I'm forgetting. So, fraction, okay.
21 cents.
21 what? What's this 21?
is that percent?
Yeah,
Oh,
it's a yeah.
Mileage,
Which one?
150,000.
100. Yes, the total capacity of your estimated units that it can produce. Yes.
Okay.
So there you should get this like long, huge rate or something like that. Okay. Now,
Okay.
how do you solve for your depreciation expense?
All right. So that is the number of units produced that year
Okay.
times the per unit rate.
Good. So in this case, because you have that funky long number in your rate, you are actually going to do an equal round.
Okay.
yeah.
And then that's the, oh, sorry, number of units produced, which is
Mm-hmm.
the miles,
Mm-hmm.
12,000
1,200.
or 1200. And then, sorry, let's see here.
So it's going to cost me 21 cents per mile, if you think of it that way.
Great. Okay. And okay. $257.67.
$257.67. And in this case, is this one going to be time sensitive? Do we care how many miles we did for, is this a year rate or is this, or in other words, is this time sensitive?
No.
No. All we care is about how many units we produced that month. Okay, so in this case, 257.67 is our total depreciation expense for the month of June. Okay, you can fill these out for the purpose of practice purposes. So I'll go ahead and do it with you guys. So what's my accumulated depreciation?
257.67. Yeah.
Correct. And then what is my total book value going to be?
That is cost of the asset minus accumulated depreciation.
Okay, and that gives you?
So that is cost of the asset minus the accumulated depreciation. And that is $31,951.23.
Good. All right. So we've completed our very first one, which is the depreciation for the truck, which is going to be for the month of June, $257.67. Okay. Well, and we'll piece everything up together at the end. So, what is next?
Calculate 1 month depreciation for both coffee brewers. The first brewer has a life remaining of 3 years, no salvage value. The second brewer has a useful life of 5 years, no salvage value, and we're going to use the straight line method.
Okay, so we're going to adjust for our coffee brewers. So if you find it here, it should be under brewer. I've separated the tables for you. Okay, one for brewer number 1, which is the one that we acquired the day of. So I'm gonna put SL for straight line. All right, and again, what was my asset cost?
The first brewer was $1,900.
Okay, so good. So we can find that information in your ledger. So here, coffee brewer number 1, we recognize that it was in for the cost of $1,900. Okay, so here I am. Asset cost is $1,900. Salvage value they said there was none. Okay. Useful life for the first one is only 3 years remaining. And then lastly, the date that you place into service. Well, it's clear that obviously when you buy your assets, right? What's your first thought when you open up a brand new item?
that it's ready to go, you're going to start it right then and there.
Well, first you're going to test if it works.
Right.
So, yes. So in this case, the day that you plus, it doesn't need to be any more other. All you have to do is plug it into a wall. So in this case, the day that you purchased it is going to be the day that you placed into service. So
June
in this
4th.
case, June 4th. Okay. Now let's go ahead and fill out the second one for the coffee brewer number 2 as well, since we're already here. So straight line. So what is my asset cost for my coffee brewer number 2? We may have to do some math here.
It is 26.
Okay, and I'm sorry, and was typing, so what is the question? You're doing the cost?
How do you solve
For the
for
second
the how do you solve for the cost of the second brewer?
So I took the 26.27.95 and I subtracted the 1% discount we received of the 22.66, and I came up with $2,605.29.
So this is what you did, right? 2,605.29. You could also do this minus this. Say 20. So 2,605.29.
Yes.
Yes. And that's the cost of your second coffee brewer. So what was it? 202
2605.29.
Yep.
2605.29. Good. Again, we recognized there was 0 salvage value and there was 5 years remaining. And of course, when was the day that we bought this item or actually placed it into the account?
So would we do the June 10th?
Yes,
Okay.
June 10th. All right. So let's go ahead and work on the first brewer first, and then we can go ahead and complete this. So June. All right. What's the depreciation basis going to be to calculate for straight line?
Depreciation base is the book value.
No.
Oh, I'm sorry, that's double declining. Oops, straight line. Depreciation base for cost of asset minus the salvage value.
Good. In this
In this
case,
case, it's 0.
yes, it's 19. It's still going to be 1,900. Okay. All right. What is the depreciation rate going to be?
So we're going to take, this one has 3 years, so we're going to take 3, or we're going to take 1 and divide it by 3, which is going to give us that 0.333333.
Good. Good. Okay. How do you solve for the depreciation expense?
Oops. Sorry, I'm putting in my thing.
No worries.
All right, there we go. So we're going to take the depreciation basis times the rate. So we're going to take the 1,900
Mm-hmm.
and we are going to multiply it by the rate.
Okay.
Equals this times this. Oh, I didn't put the rounding thing in. Hang on one second.
Okay, so I guess I'll do that with you as well. So equal round this times this.
This, comma, 2, enter, gives us $633.33.
Okay.
Oh,
Now,
that's right.
tell me, is this correct? Or is this the depreciation expense for the month or for a whole year?
For the whole year.
It's for the whole year. So
So
how do
now I need
you...
to take that and divide it by 12.
Correct. Okay, so I'm going to go ahead and just redo my formula. Equal around this times this divided by 12, comma, 2.
Hold on, I'm catching up.
Uh, oh, you do the divided by first. Okay.
Wait. Oh, we're doing it in that column and not the other one. Okay.
Which column?
You're in the depreciated expense column. It's not the accumulated depreciation column.
No, because we have to
I'm looking at it.
record the depreciation expense.
Oh, which is not the 600 and whatever it was.
That's for
No, you
one
have to
whole
divide that
year.
by 12.
You have to divide that by 12.
Okay.
So I got $52.78.
Yeah.
$52.78 is correct. And then you can also, if you're kind of doubting about that, you could take the 63333 divided by 12 yourself, and that is correct. It is $52.77, whatever. So again, accumulated depreciation is going to be the same. And to solve for my book value is going to be...
Equals your cost of the asset minus the accumulated depreciation.
Okay.
So
Which...
it'll be this minus this gives us $1,847.22.
Good, Kerr, yay. Okay. So that's only the depreciation expense for the coffee brewer number 1. We still have to figure out what the coffee brewer number 2 is, because we bought them at different times. And second thing is, the first one that we bought, it was been used. All right, it only had 3 years left. This is a brand new that we bought, and it has 5 years now. So now let's go ahead and calculate what this one's going to be. So again, we're going to depreciate for the month of June. Okay, depreciation basis is going to be...
It's the cost of the asset minus the salvage.
Mhm.
There's 0 in the salvage.
Mm-hmm.
2605.29.
Okay. And the per unit rate, the depreciation rate in this case is going to be
20%.
20%. And my depreciation expense for the month of June is going to be...
Sorry.
Oops, what is that?
Let's see here. Expense, depreciation basis times the depreciation rate.
Mm-hmm.
Sorry. Yes. And, still, sorry. I forgot to do the 12, so let me do that again. Okay, $43.42.
Okay. Making your accumulated the same. And so your book value is going to be...
$2,561.87.
Okay, so now we got to combine these two numbers to get our total costs of good. I mean, our total depreciation to be a total of the 52. So I mean, you can do this on the side, whatever, doesn't matter. At the end of the day, we're gonna put it in our journal anyways. So I have a total of $96.20 in the coffee brewers for depreciation. Okay.
Yep.
All right. Let's see what's next.
Okay. Calculate 1 month depreciation for coffee grinder. 5-year life, straight line, no residual value.
Okay. So where is my depreciation table? Okay, so I'm going to go ahead and find my grinder. So it's the next tab right over. We know that it's straight line. Okay. What is my asset cost for the coffee grinder?
The total is $4,145.57.
$4,145.57. So 41, 45, 57. 41, 45, 57. Okay, we have no residual value, and I believe it's 5 years. And when did we place it into service?
The day we bought it on the 15th.
Okay, so the day that we bought it, okay, is not the 15th.
Oh.
But it is the day that we transferred it in here to get it ready for service. Remember, we also had to incur 2 other things in order to get my coffee grinder into service.
Right.
But in this case, yes, you placed it into service on the 15th. Okay. So what does that mean? Do we depreciate it this month or no?
It is on the date, so it would go for the next month. It's the cutoff date, right?
What is the actual cutoff date?
First to the 15th.
1st to the 15th.
So I guess anything beyond the 15th. So I would still put it on June.
Yes. So we do actually have to calculate it this time.
Okay.
So my depreciation basis is going to be.
All right. So let me get back here. Straight line. Okay. So it's cost of the asset minus the salvage. And there is no salvage.
Okay.
Correct?
Mm-hmm.
Right? So what is it? 4,145.
Okay. The depreciation rate is going to be.
Let's see here. Yeah, it has the 1 divided by the estimated useful life, 5, which is 5, right?
20%.
20, okay. And then we have the depreciation expense is the depreciation basis times the depreciation rate.
Okay.
Yeah. This. This. Correct. Oh, no wonder. I did it again. So we go around. This. $69.09.
Oh, whoa, I got an invalid number. Let's do this again. Equal round. There you go, 6909. That makes the accumulated appreciation. So what is my book value going to be?
And the book value is the cost of asset minus the accumulated depreciation. So, see here. That minus this. That is a total of $4,076.48.
Good. Okay. All right. What is next?
Calculate 1 month depreciation, computer, printer, and cash register. 5-year life, double declining, no residual value.
Okay.
Double declining. All right.
All right. So let's go and find my items. So I have a computer. Computer is going to be double declining, DD for short. Okay. What is my computer? How much does my computer cost?
Looking for it.
There it is.
Printer, computer. $1,834.84.
Okay, 1834.84.
1834.84. Yep.
All right. All of them don't have residual values, and this was given that this is 5 years. Okay, good.
And the date we put it in service was June 5th.
Yes, right. When you get your computer, you need to set it up, so you need to turn it on, set it up so it's ready for service. And all you have to do is just plug it in. All right. Because it is the beginning of June, we're going to calculate depreciation for the month of June. Okay. Book value. Book value for the computer.
Depreciation basis.
Good.
84. And then our rate is going to be 5 divided by 1, which is going to give us 20%, and we're going to multiply it times 2 because we're doubling it, which is going to give us 40%.
Good. All right.
0.4. All right. And then our depreciation expense is going to be equal, round, just in case. We're going to take the depreciation basis and multiply it by our percentage. And then we are going to divide that by 12 and put my 2 decimal points. Oops. 2. Giving me $61.16 for my depreciation expense.
Good. And what is your book value going to be?
Sure. Cost of asset minus the accumulated depreciation. Okay, so equals this minus this. Boom. $1,773.68.
Yes.
And before you move on, I'm sorry, can I see how you formulated the rate with the formula? Because I messed it all up. I'm sorry.
It's just, I just did 1 divided by 5 times 2.
Oh, okay, times 2. Okay, all right. Sorry. Okay.
No worries. Okay. So good. We've completed the first one, right? We calculated $61.16 of accumulated, depreciation expense for the computer. All right. Now, what about the printer? So again, we're going to recognize double declining. All right. What is our asset cost for our printer?
$378.87.
378.87. 378.87. Right. No residual value. 5 years. Excuse me.
Bless you.
Ew.
Thank you. And lastly, what is the date that you place it into service?
June 5th.
Yes, June 5th, because you need to test print as well. All right, so June. All right, depreciation basis.
Oh no, that's not right. Man, got myself all messed up here. All right.
Right, hold on a second.
Yes.
Are we silently doing this and then you come back and review our answers after?
I'm sorry. No, I was just putting everything in.
Okay, so let me go ahead and catch up with you guys.
Well, I didn't do that either. I was gonna, but all right, hold on.
Okay, so do you want me to go back and tell the formulas and everything?
You just, if anything, since it sounded like you guys were working on it silently, you guys go ahead and tell me. Just go ahead and tell me what the answers are.
Hold on a minute. Well, let me make sure I'm where you guys are, because I'm not that far. I didn't do them all.
Okay. Okay.
Hold on a minute.
Didn't know what was going on.
Sorry.
No worries.
Oops. Oh, now darn it! Why do I keep doing that? Hold on, I messed it all up again. Sorry.
No worries.
Seriously. Sorry, you guys.
What? Okay. Where are you stuck on?
I don't know. I keep forgetting to put round in, so I have to keep going back and.
Oh, I mean, honestly, you don't have to do it. It's just because like our numbers are kind of odd. Like we have 87 cents. Can you tell me you can divide that evenly?
Right.
So I only do it so then we can make sure that when we get our depreciation expense that it comes out evenly.
Okay, sorry. 366.24. Okay. I'm done.
Go ahead.
Okay, me?
Whoever.
Whatever. Doesn't matter.
Doesn't
I can
matter.
do it. I have the. We'll just start from the beginning. The depreciation basis is the 378.87. The rate is 40%.
Mm-hmm.
Depreciation expense is $12.63. The accumulated depreciation is $12.63. bringing the book value to $366.24.
Good.
That's what I got too.
Perfect.
Yeah.
All right. Let's go ahead and do the cash register. So again, we are recognizing that we're going to be definitely using the cash register a lot in its life. So we're going to depreciate it twice as fast because we're using it every day. So what is my cash register cost?
$649.49.
Yes. $649.49. No salvage value. And 5 years that has it. And when did we actually purchase this register on?
June 6th.
June 6th. Okay, of course, we need to test the register to make sure that it can print its receipts and whatnot. So there you go. So we are going to place it in the month of June. All right. Depreciation basis.
Is the $649.49.
Okay. The rate is going to be
40%.
1 divided by 5 times 2, 40%. And my depreciation expense is going to be
$21.65.
$21.65, making that my accumulated depreciation as well. Bringing my book value to be
$627.84.
good. Okay. Oop. Let's see what else we have. All right, Robin, did you get the same answer and everything?
I'm there. Yep. Yes, I did.
Perfect. Okay, so then what has happened next?
Okay. Calculate 1 month depreciation of furniture. 7-year life, straight line, no residual value.
Okay, so 7 years, straight line, no residual value on all things that are furniture. So what is all things that are under furniture?
Tables, counters, desk sets, shelves.
Mm-hmm. Tables, counters, desk set, and shelves. Good. So that means we're going to do one at a time. So let's do the tables first. All right. Straight line, SL. No residual value. And it's 7 years this time. So how much are my tables?
Second, let's find the tables.
Right. Let's
Bistro, tables, and chairs.
Mm-hmm.
Okay. The amount is $3,327.54.
So 3327.54 is the asset cost. Was it 3327.54? Oh my gosh.
332754. Yes.
Perfect. Okay. And when did I actually place this into service?
June 8th.
June 8th. Yes, always. Tables are pretty straightforward. You set them up. How hard can you place them into service? Okay, so good. So we are going to, okay, the minute you sit on the chair is the minute it depreciates. Okay. All right, so depreciation basis is going to be?
This is the 3,327.54.
And the rate's going to be?
Let's do the, is minus, the 1 time divided by 7. What did you get? depreciation expense is the depreciation basis times the rate. So let's go and that's 3961.
3961. That's going to be your accum.
Now we have the 3,327.54 minus the 3961 with the book value of $3,287.93.
Okay, good. Next one is going to be the counter. So we know it's straight line. We know that there's no residual value. And its useful life is 7. Okay. How much is the counter?
It is $1,193.22.
So 1193.22. Right, same thing. We also got this in on the 7th. Okay, pretty straightforward. A counter, you just put it up. There's nothing you can really do. So 6, 7. What was it? 11.
93.22.
Thank you. 1193.22. Okay, so we are going to depreciate for the month of June. Okay, depreciation basis.
Depreciation expense. $14.21. Book value is $1,179.01.
Good.
Very nice.
Okay. So again, let's go ahead and do the desk set. So again, desk set is straight line. All right. Estimated life is 7, 0 salvage value. And how much did it cost you for the desk set?
Information,
$658.37.
65837. 65837. 65837. Okay, and of course, the day that we placed into service is going to be,
June 7th.
yes, June 7th. Right? The desk set's going to be automatically in use because you need to turn on your computer and set your table up. So, yes, it's going to automatically be in use. So, depreciation basis is going to be, oh, forgot the formula.
All right. Depreciation expense is $7.84.
$7.84, making my book value to be,
This minus this, bringing the book value to $650.53.
good. All right, lastly, the shelves. Let's go ahead and complete the shelves. So again, it is straight line. Yes?
Then
Yes?
I'm sorry for interrupting, but I have to go to work right now. They change my shift. Is it okay if I leave a little bit early?
Yeah,
I'll
that's fine.
go over the class and the videos. Is it okay?
Yeah, go ahead. Thank you for letting me know.
Alrighty, thank you.
Okay.
Goodbye.
Bye.
Bye.
So again, the shells, right? 7 years. Salvage value. Okay. I just want to finish up these depreciation tables real quick, and then we'll call it a day and journalize tomorrow. So go ahead and just let's just finish this out. Date that we placed it in service and the asset cost is going to be
So we placed it in on June 7th, and the asset cost us $577.08.
57708. Okay. June 7th.
Depreciation expense is $6.87.
Okay.
This minus this, bringing our book value to $570.21.
Okay, good. Yay. All right. Let's see what else happened here. Last one, since we are already in the depreciation expense, I also threw in goodwill so you can calculate your amortization, because essentially amortization is the same thing as depreciation, except it's for intangible assets. And we do have an intangible asset. We have goodwill. So what does it say here?
Calculate 1 month amortization goodwill, 15-year life.
Okay. So what do we know about amortization?
Not enough that I would have retained that information. Let's see here.
Previous year payment plus current year depreciation expense. What about here? It looks like it's the
Same.
amortization is used on intangible items and is depreciated like straight line.
It is
but
like
has
straight
no
line.
salvage value.
Thank you. Good job. Okay, so there's a difference. If you notice it just by looking at the table, there is no salvage value. All right, and the assumption here is it says that it's for 15 years, okay? And if it acts like straight line, except no salvage value, so let's go ahead and enter the information. So, what is my total asset cost?
Hang on. 2100.
2100. Oh, let me find actually mine so I can.
I'm gonna see it too, where I can find it here. Where the heck is it?
It's under prepaid, under that. There you go, Goodwill. It's almost second to last account. So, and how does intangible assets actually work? How do you place this in service?
Well, this was our business name, so it was the date that it was approved, right?
Exactly. It was the date that you acquire it. So in this case, the day that you acquired it was June 4th, is the day that you're going to start amortizing it. Okay, so in this case, it definitely is going to be we're calculating 1 month of amortization for the month of June. Depreciation basis is going to be whatever the asset cost is. Okay, which I didn't even label in here, which I know you said 2100.
Yes.
Yeah. All right, equals 1 divided by 15 for our rate. Oops, that's not going to come up. That says minus.
Correct. 1 divided by 15.
Which gives us 0.06666666 forever until you get to a second.
Okay. All right. So that means we definitely need to use that equal round.
Equal round. Think this times the rate divided by 12.2. I came up with $11.67.
Good. Bringing your total amount to be for your book value is
This minus this. I got $2,088.33.
good. All right. Save your depreciation tables because we will come back to them tomorrow so we can journalize it because right now is exactly 4:35-ish. So I'm going to go ahead and let you guys go early and we will continue because the journaling process can actually take a little more than 15 minutes. So let's go ahead and call it a day. Other than that, okay, good job, guys. And we'll continue with the rest of the scenario tomorrow, and we're going to stop here.
Okay.
Okay? All
I
right.